Hello everyone. Today we're going to dive into a topic that I believe can change the way you perceive financial trading forever. Imagine yourself standing on a foggy path, holding a map in your hands, but are you sure it will safely lead you to your destination? Technical analysis is like that map, powerful, detailed, but not perfect. So are you truly heading in the right direction, or are you just following vague signals while missing the bigger picture? In financial trading, especially Forex, many people believe that technical analysis is the one and only key to unlocking success. But my friends, if it were that simple, wouldn't we all be millionaires by now? The game in the financial market isn't that easy, and today I'm going to share with you why relying solely on technical analysis might lead you astray and what the real path to success looks like. Stay with me until the end of this video, because I'll be sharing lessons from my own real-life experiences, the kind of things books will never teach you. And if you find this topic helpful, don't forget to hit like to share this valuable content with more people, and subscribe to the channel so you won't miss more insightful videos in the future. Now let's get started. Have you ever looked at a chart full of candlesticks, indicators, and thought to yourself, this is the key to conquering the market? Don't worry, I've been there too. We often get caught up in the maze of numbers, trend lines, and overlapping signals, thinking that having enough indicators will lead us to success. But in reality, the market doesn't operate that simply. It's more complex, more challenging, and often the things we overlook are the most important factors. Technical analysis, without a doubt, is a powerful tool. It shows you the market's behavior, recording the footprints of buyers and sellers. A price chart is like a diary. It reflects the fear, greed, and expectations of the crowd. It allows you to identify trends and determine logical entry and exit points. But remember, a diary is not the whole story of a person's life. What the chart doesn't show are the major gusts of wind that can blow away all predictions. A speech by the Fed chair, an unexpected inflation report, or a political upheaval that shakes the market. I once witnessed a friend dive into the market with unwavering faith in price patterns. He was a master of technical analysis, able to recite RSI, MACD, and Fibonacci levels with ease. But one afternoon, when his chart showed a perfect pattern, an unexpected news event completely upended his calculations. All he could do was sit in silence as his account evaporated. He didn't lose because he lacked technical knowledge. He lost because he forgot that the market is not just charts. It's also a complex picture of emotions, news, and unpredictable factors. You see, technical analysis is like a flashlight lighting your way in the dark. But that flashlight only illuminates what's directly in front of you. It can't reveal the whole forest or the predators lurking in the shadows. Putting absolute faith in technical analysis is like limiting your vision in a world that is far broader and more dynamic. The market doesn't just operate on patterns, it's a stage for chaotic dances where news and crowd psychology can change the rules in an instant. The bigger problem is that when too many people rely on technical analysis, it loses its inherent effectiveness. Imagine you and thousands of others all spot a double bottom pattern and rush to buy in. What happens? A reversal occurs just when you think you're on the right track, because the market always has a way of outsmarting predictable forecasts. This is the herd effect, a psychological trap that less mindful traders often fall into. So how can you avoid losing big by relying solely on technical analysis? The answer doesn't lie in abandoning this tool, but in learning to place it in the right context. Technical analysis is an excellent companion, but it's not your only ally. You need to broaden your perspective by combining it with fundamental analysis and an understanding of market psychology. Remember, every price chart is a symphony of supply and demand, but the real conductor behind it is the macroeconomic factors such as inflation, interest rates, or central bank policies. Just like a hunter doesn't rely solely on a map, a skilled trader must learn to listen to the market, sensing the winds of change before they become a storm. This requires patience, observation, and a mindset ready to embrace the unexpected. Some days, the market will act like a wild, unpredictable beast, and your job isn't to tame it, but to survive its fluctuations. Finally, always ask yourself, am I seeing the whole picture? If the answer is no, it's time to step back and look at the market with a broader perspective. Technical analysis is a flashlight, but don't forget to bring the compass of fundamental analysis and the keen eyes to sense the signals that only intuition can capture. The market is never a place for dreamers or the lazy. But if you know how to balance the factors, how to use technical analysis as part of your toolkit rather than treating it as everything, you'll find the path to success. And when that happens, you'll no longer be the prey, but the confident predator in a world full of uncertainty. To a newcomer, the financial market often appears like a colorful painting, with technical analysis as the primary brush. But you'll quickly realize that relying solely on this brush will leave your painting lacking depth and meaning. Success in the market isn't about mastering singular tools, but rather the art of coordination, where technical analysis, fundamental analysis, and emotional management come together to create a harmonious symphony. Imagine yourself as a sailor facing a stormy sea. Technical charts are your compass, guiding your direction, but if you cannot read the changing weather, the incoming storms, can you truly sail safely? Fundamental analysis is the sky, the clouds, and the winds, the elements you must learn to understand if you want to become a skilled captain. Understanding the impact of news is indispensable. A high inflation report, a speech by a central bank chairman, or an unexpected interest rate decision can completely alter the trends that technical charts are indicating. I once witnessed a trader who was excellent at using technical patterns but suffered significant losses when a surprise interest rate cut was announced. This wasn't a failure due to a lack of technical skill, but because he overlooked macroeconomic factors, the very elements that shape long-term trends in the market. Numbers like GDP, unemployment rates, or industrial production indices aren't just dry data. They're the lifeblood of the economy, the signals that forewarn of major changes. A trader who doesn't understand these elements is like someone stepping into the forest without recognizing the footprints of predators. You can't just look at charts and ignore the bigger story unfolding across the globe. But understanding the market alone isn't enough. You also need to understand yourself. Trading is the ultimate test of human emotions. Each price jump, each counter-trend signal can push you into a state of panic. Emotional management, therefore, isn't just a skill, it's a lifeline. Patience in waiting is a trait every successful trader must possess. Have you ever observed how a crocodile hunts? It doesn't rush into its prey. It lies still beneath the water, perfectly camouflaged, waiting for the moment when all conditions align. One single, powerful, precise snap is all it needs to fill its belly. Traders are the same. Not every signal on the chart is worth chasing. Not every opportunity is meant for you. Knowing when to wait and when to act is what sets a successful trader apart from a reckless one. I recall a friend once saying to me, "Every time I fail, it feels like the market is against me." But the truth is, the market doesn't care about you. It simply operates the way it does. What you need to do is learn from those failures. Each losing trade isn't a personal insult, but a valuable lesson. You don't fail because you're bad. You fail because you might not have prepared well enough. Instead of blaming yourself, ask, what did I learn from this? The best traders aren't those who never lose. They're the ones who know how to get back up after every setback, who can use failures as stepping stones to progress further. They learn to control their emotions, accept risk wisely, and refuse to let greed or fear dictate their actions. Ultimately, trading isn't a battle against the market. It's a journey to understand yourself. Each time you combine technical analysis with fundamental analysis, each time you control your emotions and make a sound decision, you're moving closer to your goal. Success doesn't come from always being right. It comes from always being ready to learn and improve. Remember, the market doesn't favor anyone. But if you know how to see the bigger picture, from the macroeconomic figures to the smallest emotional currents within yourself, you won't just survive, you'll thrive. The world of trading is a vast ocean, and only those who know how to harmonize all the elements can steer their ships to the shores of success. The financial market is not a place for those seeking ease. It is a fierce battlefield where only those who prepare, learn, and adapt can survive and thrive. On this journey, building a multidimensional trading system is essential. It is not merely the combination of technical tools or indicators, but a delicate balance between human factors and the unpredictable fluctuations of the market. I once heard a story about a young explorer venturing into the Amazon rainforest. He carried all kinds of advanced equipment, but lacked a reliable map. After a few days, he got lost in the deep jungle, where modern devices became useless. Eventually, he had to learn to feel the flow of water, the direction of the wind, and the traces of nature to find his way out. Trading is much like that journey. Technical indicators, however powerful, are just tools. What guides you through unpredictable fluctuations is intuition, mindset, and discipline. A multi-dimensional trading system doesn't start with RSI or MACD lines, but with a clear plan and the discipline to follow it. That plan is your compass, keeping you from getting lost in the maze of emotions and false signals from the market. Ask yourself, when will I enter a trade? How will I exit? How much am I willing to lose on this trade? If you don't have specific answers, you don't have a plan. You're just gambling on luck. Discipline in trading isn't just about following rules. It's the art of mastering yourself. A disciplined trader doesn't break their plan because of minor fluctuations. They know that no victory is worthwhile if it comes from disregarding principles. But this isn't easy. There are times when the market tempts you to break discipline for quick profits. And there are moments when greed or fear compels you to close a trade before it reaches its target. But remember, every time you break discipline, you not only lose money, but also weaken your trust in yourself. Simplification is key to keeping your mind clear during the toughest times. The market doesn't reward those who make things complicated. It favors those who focus on what truly matters. I've seen many new traders try to cram dozens of indicators onto their charts, thinking it will make their predictions more accurate. But in reality, it only confuses them and takes away the big picture. A good trading system doesn't need too many tools. It only requires a few simple but effective indicators, along with the ability to read price action and understand trends. However, a trading system only becomes truly effective when accompanied by a solid risk management strategy. This is something many overlook, but is the key to survival in the market. You can't control the market, but you can control how much you're willing to risk. Never bet more than 1 to 2% of your total capital on any single trade. It may seem slow and cautious, but this patience will help you endure even the toughest times. Risk management isn't just about setting a risk threshold. It's also about preparing your mindset to deal with losses. Consider every loss as tuition on your journey to becoming a better trader. I know this isn't easy. Everyone wants to win, and losses always leave negative emotions. But remember, failure isn't the scary part. What's truly scary is failing to learn from it. A great trader isn't someone who never loses, but someone who knows how to rise after every setback. The market is like a massive wave, constantly changing and full of surprises. If you're unprepared, it will swallow you whole. But if you have a solid trading system, you'll know how to ride the wave instead of being swept away. Finally, remember that trading isn't a battle between you and the market. It's a battle between you and yourself. Success doesn't come from always being right, but from mastering yourself amid uncertainty. A multi-dimensional trading system, combining analytical thinking, market understanding, and emotional control, will be your reliable companion on this journey. The trading journey isn't a straight path. It's full of twists, unexpected turns, and moments when you feel like giving up. But every time you overcome a challenge, every time you stick to your plan and learn from failure, you move closer to success. You don't just get closer to your goals, you become a better version of yourself. And that is the true essence of trading. Not quick money, but the journey of self-discovery and mastery in a world of constant change.